The market is yielding. Deep red. Your portfolio foundation is under extreme stress, and your instinct is telling you to log in, check the numbers, and do something. This is a trap. This habit of checking the screen during a downturn doesn't show responsible management. It's a structural surrender to emotion. You are treating a 30-year skyscraper like a temporary tent. In this video, we replace emotion with engineering. I will show you how to execute a clinical, professional, structural audit. We will inspect the foundation, not the price. No emotional liquidations. No guessing. Just engineering. Let's inspect your portfolio. Bleeds, most investors look at one metric: the total balance. Is it up or is it down? This is the one big pile fallacy. When you treat your portfolio as a single uniform entity, every market correction feels like a systemic collapse. You end up reviewing your portfolio based on price action alone. This leads to the deadliest mistake in investing: treating your long-term core foundation like a short-term swing trade. Architect conducts a structural audit based on portfolio segmentation. Different segments have completely different physics. Rule number 1, auditing the core and low-attention segments. When you review your long-term compounders, you don't ask, "What did the stock do this month?" You ask, "Is the structural integrity of the business still intact?" If the long-term fundamentals hold, the correct action during your audit is inactivity. Inactivity is a disciplined choice, not neglect. Knows there is one exception: extreme structural dislocation. When the market reaches euphoric highs and an asset becomes structurally overextended, we execute a mechanical trim. We reduce the load to harvest excess capital. Conversely, when the market yields to extreme panic, like the red zones we are seeing right now, we don't run. We use the pricing dislocation to deploy dry powder. We reinforce our highest conviction assets at a massive discount. This isn't market timing. This is mechanical rebalancing. 2. Auditing the volatility harvester. This segment is not for catching falling knives. It is a pure momentum engine, governed strictly by our market sensor, the Smart Investor Index. When the index is low and flashing red, this segment is locked. During market panic, your cash buffer stays full to absorb the structural shock. But when the index turns green and structural momentum is confirmed, we act. We deploy the cash buffer into the harvester to ride the upward pressure. The audit happens at the peak. When the index crosses into overgreed, above 90, we do not wait for the crash. We execute the cleave. We mechanically liquidate 85% of the position, locking the profits safely back into the cash buffer. We leave the remaining 15% to run if the trend continues. You secure the foundation and let the house money work. In every day, set a deliberate schedule, whether that is monthly or quarterly. When you sit down, don't look at your P&L first. Look at your segments. Identify expired tactical reasons. Check your dry powder. Leave your core to compound. Now, I have a question for you. Be honest. How often are you logging into your account to check prices during this market drop? Daily? Hourly? Let me know in the comments below. Acknowledging the habit is the first step to fixing the architecture. Stop guessing and start running professional structural audits. You need the right blueprint. I've made my complete retirement portfolio framework available on Notion. The link is in the description below. Download it, map out your segments, and start treating your wealth like an architect. Think systematically, act with intent, and I'll see you in the next video.